Good morning, traders, and welcome to the daily call today, Friday, the 2nd of June. All right, taking a look at yesterday's markets, we had data come out from the US. We had the private sector, or the ADP, non-farm employment change number. That surprised the market at 278,000 new jobs compared to the forecasted 173. Unemployment claims at 232, very much on forecast. And the ISM manufacturing PMI number coming in at 46.9, very close to the forecasted 47. That was all from the US. However, the US dollar didn't have its own way. It actually lost ground against the majors yesterday, surprisingly, but that's what happened from that sector. Also from Europe, we had the CPI flash estimate number year in, year out at 6.1%, which was slightly lower than the forecasted of 6.3%. That's all that's taken place yesterday. So let's just jump along and move to our chart of the day this morning. All right, the chart that I'm looking at this morning is the Aussie Kiwi on a daily timescale. Now, I showed you this chart 2 days ago, and this is exact same screenshot, or sorry, same chart without any modifications of what I showed you 2 days ago. And what we were looking for was these candles over here to see if we could get any reversal there to trade in this direction. What's happened is we actually broke higher. Okay, see here, this little section here has broken higher than that level there. So what that meant was that we never triggered into a trade. What I can now do, and this is part of doing graphical analysis, you can remove the lines to see if it still suits your pattern. Now, if I brought that one up there and I've done it like that, it looks very, very good to me as well. The wicks are going through over here, but that's not a major issue. A little bit of wicks through there, a little bit of wicks through there. I've done this modification to my charts live on this recording so that you can actually get an understanding of what you can and cannot do in trying to find these charts. When I look at it now, it looks really, really good. So I need to do one more thing. Let me just move my sector here. So the two candles in question are there. This one here is this morning's candle, which is around about nearly 2 hours into formation. If it can remain exactly as it is right now, this candle would be an inside candle setup, and tomorrow or on Monday, if the next candle, let's say, starts over here somewhere, was to break the bottom of that candle, then that's it, we are sellers in that one. If it breaks the high of that candle, well, then you basically cancel the order out. But before any of that happens, we have to wait to see what this candle will end up looking like. So let's place it into the hot list, Aussie Kiwi on a daily timescale. That is our chart of the day, and let's see if it plays out. And hopefully this manipulation of the lines and the analysis helps you understand for your own analysis moving forward. All right, so what's on the agenda for tonight? It is the biggest news of the calendar month in the world of trading currencies. It is the non-farm payroll job numbers from the US. That happens at 10:30 this evening, along with the average hourly earnings and the unemployment rate. So look out for that. Please, if you've never traded this news before, what I would suggest is just even look at it, just watch the volatility as we approach that 10:30 mark from 10:28, 10:29. As we click straight onto 10:30 and the news is released, the market does get quite volatile. That pretty much wraps up for this morning. Guys, as always, please feel free to contact us if you do have any questions. You can also follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, hope you all have a fantastic trading day and have a great weekend. Speak to you on Monday for the daily call. Bye for now.